Mistakes, very little surprise, is given attention in training materials for traders. I often watch different instructional videos on YouTube about what strategies are offered to beginners, what strategies are offered to more experienced traders, and everywhere there's described the algorithm of work on approximately one time frame, particularly common on small time games. When you are given some algorithm of work, you put some technical indicators on the chart and make deals on them for 5 minutes, 15 minutes, and so on, without seeing the whole picture. But you're definitely going to encounter situations on your ranking path, like this one right here. You can see that we have the chart in the flute. Here came the sharp momentum on the sale. There was liquidity on the sale. You put your indicators out. They all show you that you should be making trades down now, and a good time to trade down. But if you look at the whole market and the whole picture, you will see this situation, that if you switch, for example, to the weekly frame, we see that we have a long-term growing trend. We are, for example, on the Bitcoin chart from the end of 2023 in a steady rising trend. And right now specifically, your scalpel trades that are pointing down on this short section here, they're against the overall long-term trend. And you may just happen to be lucky enough to make a trade against that trend that you make a profit. In reality, most of the trades are on all this movement. A trade down would have yielded a losing result. Only in very short periods could you make money from it. But traders always have a very important saying that the trend is your friend, trend, 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 and against the general trend, you should not trade. Let's start with some more important basics. Basically, talk about how the trend is different from summer. It's a trend. We have a new market when we have constantly changing lows and highs. If we're talking about a rising trend, as in this case, then we should constantly have highs and lows being updated, and they should be updated upwards. So we have a local high, the next local high above the previous one, the next local high above the previous one, the next local high above the previous one. The next local high is above this one, and so on. The same must be observed for their minimums. So we have a local low. The next local low is higher than the previous one. The next local low is again higher than the previous one. And when we have an updated high going up, an updated low, and a rising high, we can talk about an uptrend. Now, when we talk about the downtrend, the situation is reversed here. We have highs and lows also, updating to one side, but updating to the downside. We have a local high next, a local high, a high below the previous high, and so on. Same with the minimum. We have a local low. The next local low is lower than the previous one. The next local low is lower than the previous one. E, and let's talk more about, which is where the market is 70% of the time. This is a situation when there is no specific trend in the market, and when we have equal lows and highs, or they are random in some narrow range. Like, for example, here some highs are higher, some are lower, but in general, the market is moving in such a short narrow corridor. So, back to our principle of analysis. This is a very important principle. When you analyze the chart, you should, depending on which game you make deals on, analyze the market not on it, but on those games older. Let's say if you're making trades on a 4-hour time game, you have a strategy built on the 0400 game, then our key points for us will be on time, games 1 week and 1 day. First, we'll switch to 1 week and look at what kind of market structure we have here. Visually, we see that we have a market structure that is trending. So we have an updated local high, an updated local low, and they are all pointing upwards. And that means we have a clear trend on the largest one for our analysis. We further confirm the same market structure. On the tiebreaker below, we switch to 1 day and see that, in general, the market situation is the same here. We have an overall long-term trend. We have highs that are constantly being updated. That is, there are lows that are constantly updated. There are highs that are constantly updated. And we here can build new lines on which we will trade. The next point, which should also be done according to the same principle of more to less, is to set key market benchmarks when we have a trend in the market. These will be new channels, new lines. When in the market, it will all be resistance support levels. Let's start with the trend. So we expose at our lows. We can expose the lower boundary of the channel. Here it is. At our upper boundaries, we can expose the upper boundary of the channel. This is what they will look like. A trading channel is a trend limiter within which the diagonal from the upper boundary will move, but there is likely to be a correction to the downside. From the bottom line, we are more interested in her. In the case of a rising trend, we will make trades upwards, and so on. The graph will balance between these lines, but not horizontally, as it does in the fleet. And the diagonal, as it occurs in a trend on a downward trending chart, in a line, would look like this, with a downward slope. So the key trends of the line are established. Now we're going to switch to 1 day and see what we have, what we can add here. First, we can tweak the overall trend line at 4 hours on 1 week, because we can see that here's the maximum, and here are the lows that we marked for our trading. These are the landmarks that we have plotted on the chart. Next, what do we see? That we have intermediate lines on this chart in addition to the main lines. It's more visible. We can draw an intermediate new line here as well. It is such a mirror level from which price has bounced both down and up in the past. This is also an important price point at which additional liquidity appears. And already specifically, it gives us new benchmarks for deals on our working game at 4 a.m. We can also see here that the clear trend from the update of the highs to the lows continued right up to about this point. But here's where the graph has gone already into a small fleet. You see here already, the highs of the low are not updated and the chart is stuck in a horizontal corridor. So also, at 4 o'clock, we can designate levels. Level key support levels of resistance. That's an important level of support we have here. He used to act as the resistance. Now he can act as support. We ended up labeling the benchmarks that we have the largest for 1 week in red to indicate the numbers we have on 1 day. And now we can move to our working time frame and look for trades here. As you can see, here if we were to look at just our working time, we would see that we are in a falling trend, and a pretty strong falling trend at that. But we wouldn't even be paying attention to the fact that generally speaking, the market is moving up. And that's just the short-term movement. And now those landmarks, which we have mapped on the frame of 1 day, we can use to make trades and to confirm signals. As you can see, right now, price is both at a strong support level and touching trend lines. So both of these landmarks are telling us that an upward bounce should come from here. And if we had not done that preliminary work, we would have fallen for this falling trend. And from it, we would have made a deal down. And most likely, we would have gotten a rebound against our deal and would have gotten a loss. Now we can already chart our moving average pair indicators, anything, just by the strategy you are trading. But here are these key levels that we've mapped out before. Now you'll be watching for either a refutation of your signal or a confirmation of it. Conditionally, if here on this chart, on your strategy, let's say you use levels, overbought, oversold, here showed a trade up, and we see that the support level, it confirms the trend, the level confirms it too. And that means we can confidently walk the trade up. And if you were trading on some new indicator, like a roller, it would show you a trade down. But we can see that it's against what our key levels are telling us. And that's the kind of deal we'd miss and wouldn't get the loss that would come from a further rise in that price. We can use the same further when the chart has already moved to the upside. Let's say if it bounces and reaches the key resistance level, we will realize that we already have a bounce reference point here. And around this, in this area, we should be looking for trades down. Also, the key levels that are posted on the older games serves as a good reference point for placing stops. If we went into an up trade here, we would put a stop lower than these two lines. If the stop would have triggered, it means that both levels and trend, new line and support level have been broken. And now we're likely to see the chart continue further, but likely to see the chart continue further down. We'd better not be in this deal. It's better to lock in a small loss. Also, if we conditionally From the upper level, here we would make a deal. We would place a stop lot above the resistance level and above the main new line here. In this area, if these levels were both broken, it means that we have a strongly rising trend. Our downward arrow is unsuccessful. We need to lock in a loss and not lose more money. Principle. The principle of analyzing on time flights is not only valid on such large ones. Let's say if you are trading on a 5-minute time frame, you need to target 1 minute 15 seconds. First, we analyze, start with an hour time, set all the necessary benchmarks there. Then 15 minutes, we set additional benchmarks. And already, on your working 5-minute, you make specific deals. This principle always works because it gives you the ability to see the whole picture and see the whole market. How sellers and buyers behave now and how they behaved is an important period for you in the future, and it can be a good addition to your strategy. And this principle could be exactly what leads to profits on your strategy.